Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, good morning, guys. Well, it looks like things are on edge over in the United Kingdom. Alligator on Discord is like, Truss is on an ejection sheet. We were kind of seeing that yesterday, that maybe there would be a shakeup in UK leadership. But how that actually plays out, I don't know. Let's come over to the charts because we kind of had a little bit of mixed action in the treasuries. First, let's roll things over. All right, so here in the treasuries, it was, I mean, here again, like during our session, it's kind of mixed, but then after that, it's just sell, 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 sell. Now, overnight, we had a little bit of a push down and now a little bit of a rise. And I believe that this is all due to volatility in the UK. So how that ends up affecting us and where we go from here, who knows? But I am kind of suspecting that we get like mixed action again, right? Here, S&P 500. Well, not the best day yesterday, but maybe here recovering. Oil has 2 days on the rise. So remember, it was somewhere around here that Biden was like, oh, we're going to, release more oil from the Strategic Election Reserve. But now it's starting to go the other way. So, it seems like maybe demand is coming back. I don't know. Well, here's natural gas. Natural gas is just still down. I mean, anything above $5 is a lot, but natural gas is coming back down here in the US at least. Gold and silver trying to recover from yesterday. Actually, silver did recover from yesterday. That's interesting. And then we got copper. Copper is doing well. There were some copper specific headlines overnight that I don't really know a whole lot about, so I won't speak on. And then we got Bitcoin. Bitcoin continues to just be like nothing's happening. Like their volatility has been very connected to the S&P 500, but now the S&P 500 is moving a lot more than Bitcoin, and Bitcoin just kind of like sits there and does nothing. And the dollar up big overnight, over 112, but coming back here this morning. So it kind of seems like there was some turmoil in the UK, but at least for now, the markets seem to be like chilling out about it. So we'll see. They are like right at the highs. They have resisted this level already once today. So we'll see if there is buyers here or not. And here in 5 minutes, we do get some economic numbers. So today we get initial jobless claims. We're looking for a reading of 231K versus a previous reading of 228K. So we're looking for slightly more than last week. And the Philly Fed Business Index, we're looking for a reading of -5. I suspect that that one might actually be positive. So, yeah, that's where we're at. Well, so let me get a drink and so forth, and then we'll go through Twitter here. Joseph Wang, if the Bank of Japan wants to stop yen depreciation, it'll have to adjust its yield curve control to narrow the interest differential. But if it did that, it would also inflict significant losses on JGB holders. Very low coupons means a very high duration. Something somewhere in the ecosystem could break, says Joseph Wang. Their currency intervention has not been going so well, has it? Does look like they tried again overnight to hold it to 150. Morning, Mashan and Michael. Welcome back. Yeah, about 2 minutes here. Oh, I gotta make sure that I got financial juice turned on. Sometimes I forget to turn it on. Okay, so the news squawk is just telling me that Prime Minister Truss will resign. Okay. Okay, here comes our news. Okay, we got some orders here. So the initial jobless claims is significantly higher than anticipated. But Philly Fed much worse than anticipated, negative 8.7. That's kind of a wash. I'm not quite sure what to make of that, to be honest with you. I think the Philly, well, no, I don't. So initial jobless claims is typically a higher level news event for the treasuries than the Philly Fed business index is, but it looks like that they may be reacting more to the Philly Fed than the initial jobless claims, at least with where we are in price and the number of orders that we just seen go through and all that. I think they would like to see jobless claims higher, though. Well, this still just takes us into some of yesterday's prices, so... S&P 500 seems to be liking it. Philly Fed, negative 8.7, that's awesome! Let's buy all the things. Seems like what they're doing. Seems to be what's going on. Dollar falling here. I think I got my microphone a little bit too high here. Blocking my face. Yeah, there was a little bit of an initial rise and they did break through the highs, but now they've come back down. And actually some decent selling on it as well. it is kind of feeling like we might be stuck in what we had yesterday. Where it is going to move, there's probably is some opportunities for us to make $20, $30 here and there. Maybe after we leave it moves, but that overall would be kind of difficult for us to sort out what direction it's going to go. Well, one of the big things that we got going on here, if we look at what the flows that we have today, so there is the news that we just had, the economic news. So the continued jobless claims was 1.385 million, which is about on par with what it was last week. The initial jobless claims 214 versus 231, so that is less jobless claims than expected. That's good, but that's bad for treasuries, right? US Philly Fed Business Index -8.7 versus -5. Then we also have Liz Truss probably going to resign here, or it has been reported that she is going to resign. And she is beginning a statement right now. I'm not going to switch over and watch it because I don't care, but they're doing a statement right now on that. So they will have another leadership vote, I guess. Guess they will vote again on the leader. So that's another flow that we've got going through here. That one, I'm not really sure how you sort that one out. If that's good or bad for rates or what. Then the other flow that we've got going is we got options expiration tomorrow. So that's probably going to affect the equity indexes more than it will us here in the treasuries, but that is a big one that we got to keep in mind. They are going to kind of be attracted to some of these big numbers. What else do we got? I think we do have some, well, yeah, so she did just resign. We do have existing home sales later today. 4-week bill auction, Fed's Harker, Jefferson Cook. So we got a bunch of Fed speakers today, but they're much later in the session, long after we're done. So now I'm seeing some fairly aggressive movement to the downside. It's not too much on the volume side. It kind of looks like the market makers are kind of being a little, they're being like me. We're all being pansies. Nobody wants to stand in front of it. Now we're more extended down move here. In fact, very easily breaking some of the lows here. I don't know, man. I don't see how any of this is really matters. Am I wrong? Am I missing something here? So I understand it's a big deal that she's resigning and everything, but how do you actually interpret that to mean future order flows in the treasuries selling? I'm not sure that one makes sense to me. Maybe it's just traders gonna trade. I don't know, man. Get your traders gonna trade mug in the video description below. The whole thing is just a little bit. Should be a positive for the Great British Pound. Yeah, it seems like it. Maybe it is. Maybe they are buying British bonds and selling treasuries. Liz Truss didn't. Okay, so she said she will resign, which I guess is different from actually doing the resigning, huh? I am kind of wondering if this is not one of those like spreads. So like they're buying the UK bonds and selling the US ones. Seems to me like Liz Truss resigning with all of the disaster that's been would be like considered a good thing from the markets or a good thing for yields, but that's not what's happening. I don't get. Didn't she just get in? That's the whole thing, Morgan. So we have to explain the parliament system. So the way that the system in the UK works is you get elected, and then when your party gets elected, you get to form a quote government. So like here in the United States, like everything is kind of like set and chosen, and you come in, you can nominate people to certain posts, and they might have to be confirmed by Congress, that sort of a thing. And in the UK, it's kind of like every time the leadership changes, like they consider the whole quote government leadership to change. It's like they call it forming a government. So Liz comes in and they form the government, and the people that were in charge of the different policies didn't know what they were doing, essentially. So as far as I can tell, basically what happened is the people that got put in charge weren't really experts in their fields, and just did an absolutely terrible job. And there was some people that like did bad things they weren't supposed to and got found out and resigned. So she's like, oh, this is a disaster. So she resigns. So just like the US, well, I think it's a little bit more different than that. So in the US, so in the US, it's like you're a politician. Do you want to be nominated to, so like Pete Buttigieg, for instance. Pete Buttigieg is a person. No, I get what you're saying, but I'm just saying like, so Pete Buttigieg, he is the transportation secretary or whatever the deal is, right? And this kind of seems like it's a political appointment of some sort, like, oh, well, he was just a mayor before, so let's put him in this key job, and that can kind of help him boost his profile so that he can maybe win office later, that sort of a thing, right? In the UK, the connotation around it is kind of different. It's like, you're a politician, you're supposed to, in the party, you're supposed to get chosen for one of these posts, and people want to be in those to raise their profile, and they don't necessarily have any clue what it's about. So in both instances, you could get somebody in office that doesn't really know what they're doing, but it just seems like in the UK, it's a much more significant part of like boosting your profile, I guess. But yes, you get people in there that didn't really know the job. Critical roles too, by the way. I don't know a whole lot about UK politics either. She says current chancellor will not stand to be Tory leader. So you think the Truss news is larger than the Philly Fed and unemployment claims? Well, we need to define larger, right? It appears to be creating stronger order flows at the moment, yes. Right. Does it matter for the long term of where these instruments are going to go? I would think not. But it is creating some strong flows right now. And here again, since we don't understand, like here's the thing, if I see a flow that is, especially if it's contradicts what I thought would happen, that tends to be a signal to me that I don't know what's going on, and so I don't touch it, right? Yeah, no. I get what you're saying, Morgan. You're this is tough stuff, right? So I think especially those of us in the US, we're all going to feel a little bit lost to some extent. But you're right. There was the initial jobless claims and Philly Fed information came out, and there was a little bit of back and forth. Like we actually went down a little bit first, and then we went and busted those highs. Then we came down. Then about 2 minutes after that, I suppose it was about 2 minutes after that, was then when Liz started speaking and we started seeing these other flows. So because of that, I do believe that it is probably more to do with Liz Truss and her speech than anything, but that could be incorrect. I mean, there's always that. That's really largely a theory, and there's always a small case that it could be something completely different that we don't know about or whatever. But due to the timing, it's probably most likely that it was Liz. Appreciate the stream. I thank you very much. I kind of, you know what, so I've been having trouble the past few days because on one side, I've kind of been like, well, I don't know how, I don't think that I can bring my YouTube channel to be like top of the heap kind of channel anymore. I kind of feel to some extent that there was an opportunity before 2020 and I did not get us to the place that we needed to be before that happened, and some competition that really doesn't deserve it took off in our place, and now YouTube sends all of the traffic to the competition. That's primarily for the stream. And it doesn't help that we're more focused on treasuries, which people aren't as interested in. People are more interested trading the S&P 500 and the noise, right? So, I kind of just, and it's not that it can't happen per se. I mean, I don't want to be like self-defeatist, right? Yeah, you see, you guys are always saying that. Not with that attitude, Seth. Yeah, that's defeatist. Yeah, I feel a niche. So it's kind of more like I feel like that I'm feeling what I want to, and that I want to continue pushing forward with what I know helps you guys the most, and that I need to just not care what it does to the popularity of the channel or the stream, right? Like we have really, really good content on this channel, and I just don't care anymore if YouTube doesn't see it, right? So that's kind of how I feel. Is like, oh, I'm just gonna make what I think is the most useful. That doesn't mean that I'm not going to work my hardest on the thumbnails and the titles and to get as many eyes on it as possible, because I do think that when we provide this kind of education and we help people become more informed about how markets work and so forth, that does provide an overall benefit to society. So the more eyes that we can get on this channel, the better. But I don't care to go ham and optimize specifically for the YouTube algorithm. I want to do what helps us trade the best and hope that if I do everything else to the best of my ability, that the YouTube just works out, you know? Yeah, because otherwise I'd have to be more clickbaity, etc., 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 right? So on one hand, I feel like that's a little bit freeing. Like yesterday, didn't take any trades, kind of enjoyed it. Kind of was like, well, I don't need to take a trade. I feel pretty relaxed and free, right? But that the other side of it is that I feel like that it kind of kills the motivation to actually make a video to some extent. You know? So I think that what I need to make this weekend is I need to make a video kind of on what our current trajectory and analyst expectations for inflation are. That might be, so here's a good example, because that might be something that's probably going to have a lot of competition. Like, I'm sure that some of the top people in our space, like me, Kevin, and Graham, will be making videos similar to it, right? But I think that it's still useful to you guys, and it's important to have like our kind of trade interest rate specific perspective on it, right? Even though I'm not so sure that it's going to do that well on the algorithm. We'll see, but I don't think it's going to do super well on the algorithm, right? But I constantly find myself in the evening, it's like, well, you need to read, Seth, you need to yada yada yada, and just don't have the motivation to do it. So it could just be an overall chemical thing with me, that I'll just kind of go through cycles and I'm at the low motivation part of my cycle. It's like, did get a lot of stuff done last week. Really great, I've been really highly effective. So could just be that. But I also kind of sit here and be like, well, if I'm not sitting here like trying to become a super YouTube channel, you know, why does it matter? I don't know. I'm not sure if that's what it is or what, but it's just, as someone with ADHD, getting that motivation to do things is a lot harder, right? Well, that's a pretty decent bounce off of those lows. I do kind of feel like that we might be oversold here, but has it really been 44 days since Liz Truss was put in there? That's actually longer than I thought. They might bring back Bojo. Just kind of funny. I guess one thing that would help is when you guys are like, oh, we really want to see you make a video about this or that. It's a requested video, that might be more. We still have we want to talk about macro stuff, but I don't feel like that I have the best when I go through it and I'm like, well, here are the main macro scenarios, and I've kind of already written some of that in the little strategy PDF that we're putting together, right? It's like I feel like that I would want something a little bit more interesting than that for a video, I guess. So I kind of want to wait on that one and kind of let our thoughts and our teaching on that kind of develop, because as I talk to you guys here on stream and stuff, I kind of will try out new ideas and see what works better for you guys. So I think that we might want to kind of wait on that video, right? Oh, there's other videos that we've got to do though that would really help. Well, I need to make a video about NinjaTrader 8 tips. I think that would help things a lot. I still want to make some Jigsaw videos, but they were talking about releasing Jigsaw a week ago. Another new version of Jigsaw. It didn't happen. I think they did put out a beta though. Let's see here. Yes, they did. They put one out yesterday afternoon. So we just gotta wait and be patient about that one. So I thought that maybe I was gonna end up doing a midweek video because I do kind of want to talk about that. Okay, so almost back to 110. I suspect there could be another attempt at the lows here, though. The volume in the 10 years still appears to be all sell. Lola, those guys, what are you talking about? Are you laughing at the British? Listen, the British are going through a hard time right now, guys. Don't make fun of them. Oh, you were 4 minutes behind. So are you laughing about the whole like, we're kind of giving up on YouTube? You'll see for you. Was that a typo or did you intentionally spell that like that? Those YouTubers. Oh, right. It's just, sometimes I have in my mind that like the YouTube channel will blow up and all of a sudden we'll have hundreds or thousands of people watching the stream every day. And I'm just saying, I don't think that that's going to happen. That's all. That's all I'm saying. Keelan, you're from Africa, South Africa. Wow. Well, thank you for stopping by and saying hi. Right. I think about that and I'm like, well, it could happen. It probably will happen eventually, sort of a thing. And now I'm kind of looking back and I'm like, well, actually it did kind of happen. And the reality is that what we're doing is just too niche to have too many people be interested in watching the stream. Right? That's what I'm saying. The YouTube channel itself probably continues to grow. And the YouTube channel itself, probably the growth accelerates. I mean, it looks like it's accelerating at the moment. Most of my most recent videos have been doing really well. And there's some things that I can do on videos. Like, I think that trying to optimize for like being clicked on recommended videos rather than from search might help a little bit, because I think that YouTube cares primarily about watch time. So if you're getting it from search and your video is not exactly what they're expecting, then they might close the video early. And so you don't get as much watch time from that. So if it's more like they're already watching something, they already finished watching something related and then they see my video, that might help. You know what I mean? I think YouTube Shorts will help. YouTube Shorts, when those get a little bit more popular, that can help. Okay, so they came back down here really easily, didn't they? S&P 500 now lower than they were before the news. So I am kind of seeing, so I feel like this selling is like a little overdone. Look, there is a big iceberg there at 26 that they just plowed through. I'm tempted to go for the long here, but I really don't think I can justify that with the way the order flow has been going in the 10 year, right? It kind of looks like they just want to keep going and going. And I kind of saw that big order at 26 thinking that that might slow us down. But that doesn't appear to be the case so far. Maybe I'm speaking too early, but it looks like there's just too much sell pressure. And it's already too late to get 4.16, so I don't think that I could say that there was a possible entry there for me. If I sit here and decide I want to go long interest rates, it's just, I'm still like a little bit, I'm not quite sure I understand why I'm seeing the flows that I am. There's just panic amongst the UK funds for some reason. So I just don't see how this particular news really should drive interest rates too much. If anything, it should help. But maybe they're spreading the US and UK bonds, and I can't see the UK side of it, right? Like still some big ones there, big offer at 23. So someone's trying to shove it down a little bit. I guess they called him on it. Oh, he took the fill. He took the fill. Honestly, I'm seeing a couple of things here that have reversal written on it. But that's just from the market microstructure, right? And we're getting so many market orders, I'm not so sure that those things really matter at the moment. But you're trading a lot of volume down here. And there was a big volume note at 26 too. So that might cause it to get stuck in the mud here and then get sucked back up. By the way, what are we seeing in the 6J? The 6J is getting hammered at the moment. So that's the other thing, is that could we see the Bank of Japan step in here again somewhere? No, they'd have to move quite a bit lower still, I think, in order for them to reach that point. I think when I'm sitting here in my head, I think that I'm just being overly pessimistic for no reason, because I'm mad about how the YouTube algorithm works is really what it comes down to, right? I'm mad about the way the YouTube algorithm works, and I'm frankly unwilling to do the things that would be necessary to really exploit the algorithm, because I think that they're immoral. I think it's immoral to come in and it's not like it's immoral to clickbait people, but I think it's immoral to give people thumbnails that give them some sort of expectation of profits. That's the thing that I really think that I shouldn't be doing. And I wouldn't be surprised if at some point in the future, if regulators ever got their, and government policymakers ever got their head out of their butts, that they would kind of regulate things. In fact, at this point, having gone through like my Series 65 and everything, unpopular opinion coming up, having gone through trying to get this Series 65, I would be 100% in favor of you requiring a license to day trade. Gotta have a licensure program like the Series 65 for you to be able to trade futures and options on, or intraday trades. Like, get rid of the pattern day trade rule of, 25,000 minimum or whatever the deal is, and change it into a certification. Okay, now I'm really getting like, now it's really screaming at me here. They're pushing. I'm getting a little bit of shoving around here. a little bit, a lot bit of shoving down here. Ouch. Well, I'm going to try and remain calm and try and give it a little bit of room, but that looks like really bad. Michael Gove ruled out for Tory leadership. Have no clue who that is or any idea why I should care. So there was some stacking and all sorts of other interesting behavior there. I don't know if that was related to that headline, but a little bit of overdone action here at the bottom. So like there was a big buy and then they buried them hard. Also thinking about it on this action here, like if we sit down and we say, is there like a large meta order sell, etc., 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 this kind of looks more like overall market panic, kind of everybody jumping on a move sort of a thing, which means that you might not get as much regular, you know, like it moves down, you wait 45 minutes, it moves down sort of a thing. Probably you're not going to get that. Probably it's more likely to be something that goes down and down and down and down until like everybody's just done, and then maybe it reverses hard. Other news than the UK, I haven't heard anything other than the UK thing. And of course, the economic news that we had at the top of the hour that was kind of suggested that the economy is slowing a little bit faster than expected, but that it's still not really affecting employment very much. Okay. So after quite a bit of fraught action there, they are chilling out a little bit. And then as it started getting up a little bit too high and somebody tried to smack it down again. But they seem to be handling it well. I'm looking at this. If I'm a really big player that just made a good trade off of this UK thing, like if I was just straight up trying to make money, a trade, I think that you've got to take some of it off in that action, because if things are slowing down, it's going to be harder and harder to get out, right? Like if you didn't take some profits on that move, like I'm talking if you're a really big player, like you had a really big short on or something, because you're just like maybe the Axiate guys, for instance, right? You're going to have to take some of it off on there. Otherwise, you're going to get caught chasing on the way back, right? What is the best use case for the volume stop? Well, my favorite use case for the volume stop is to come in here and put like a stop limit like this and say, okay, if the level 2 drops below 300, then I want to put a limit buy at this price, right? So you can use the stop limit to basically try and enter a catching the edge as she goes kind of trade. I really find it useful for that. Okay, let's recenter right there. Surprisingly, the indices held up really well given the rising dollar and interest rates. Maybe the short volume was just too high to drag it significantly lower. Well, so I think part of it is that the equity traders, quote unquote, don't really step in until about right now is when maybe those guys start coming in. So it may just be the case that there's just not enough volume in the ES to really move it. But at the same time, I really feel strongly here that this action that we're seeing in the treasuries has more to do with trading than anything else. They're trading the Liz Truss resigns news headline. So I don't know if this particular move really tells us a whole lot about the future supply and demand in the treasury space, because all it does is just create a bunch of unknowns, you know? But how does that, I think that it's pretty clear that this, if you do a tax plan, an economic plan that increases your deficit when you're one of these countries outside of the US right now, that it doesn't work very well. So I don't think that anybody's going to try that one again, right? So does it tell us anything else about what the future trajectory of their interest rates are? I don't know if it really does. Now, once you get somebody in power and they have a certain plan that maybe matters to the markets, then I would have a trade. You know what I mean? So I'm kind of looking here, like seeing all of this massive volume. Is it massive volume? It feels like it's a lot to me. Feels like it's a lot to me on practically nothing. Well, I mean, it seems like it's a big thing, but I just don't know. I don't get what they're getting right. And then again, like it was really fraught down here, and then it kind of chilled off. I think it kind of tells you something, right? That it was largely speculation, and that maybe we're already past the peak speculation. So if it's mostly speculation, then the equity traders being still eating breakfast might explain why they didn't really move. Maybe. That's my theory. That's my theory. Was the Bank of England guilt decision tied to Truss? What do you mean by their guilt decision? Are you talking about their decision to continue selling gilts or whatever? I was thinking this morning at work that why not put together a weekly highlight of the stream? All I would have to do is cut the clips every day and then have them time the line, and Friday it would be done. Yeah, well, so Zach, if you want to do that, that would be awesome. I'm not sure that would be the thing that would help the stream the most. So I think the thing that would probably help the stream and this channel the most would be posting YouTube shorts. Because that increases discoverability, right? But it kind of depends on what you want to do. So like if you really want to get into video editing and telling a story sort of a thing, then that's when like a weekly synopsis would really matter, because then that gives you the opportunity to kind of string together a narrative and a story that people can follow. And, you know, that's harder to do. But if you do it well, that can really get people interested in the channel. You know what I mean? But I've just found that like when we have a big move, you know, when we have a big move and I record it and put it on TikTok, it always does well. Like people are interested in watching you take trades in like a fast environment and make money from it. That's really interesting to them. Didn't they intervene in the market a couple of weeks ago? Okay, so yeah, so remember the whole thing was that pension funds were let's say having trouble, and so the Bank of England came in and said, we will buy gilts and we'll do it for a certain amount of time. So that happened, and the expiration time of that was last week. So supposedly that operation should be finished. The Bank of England should be back to quantitative tightening. So no, I don't think that had anything to do with Liz Truss or anything. And I don't know like what's next for them. If I don't know. It's kind of a weird situation, isn't it? Man, I tell you what, there was, I think that part of what may have been happening there on when we first took that trade was the micros, I think, overreacted compared to the treasuries, because look, the treasuries are up way more up than they ever went down, but we're getting like half as much favorable excursion. Kind of curious. Is it that the 30-year is lagging? It does look like it's more the 5-year selling, 30-year buying. Maybe if we start moving back up, if we continue to move up, and this could be like a pullback area. You gotta keep an eye on, right? But if they do decide that their next leg is going to be up, maybe it would steepen then. Overall, though, I would say that the order flow has chilled out substantially here. Yeah, at the lows, there was some crazy stuff, and now it's almost turning slow again. It's not quite too slow grind quite yet, but it's getting there. It's getting there. Okay. Well, that tick up seemed to trigger a couple of orders. You got the ZB short and played it back up. That's good. Like if you got out at those lows down there, good job. I think that we were reading the order flow really well in that situation. I think something that kind of bothers me right now about my trading is that some of the trades that we've taken this week have been a little bit too technical. And you can see that they're just not doing as well, are they? But there was a lot of technical reasons down there at the bottom. Like when I said it, when I took it, I was like, this is screaming that reversal, right? It was probably... That doesn't mean that like we're gonna retrace this whole thing and go back up to the highs, although that would be hilarious if they did. But I think that it does mean that there was some things about the liquidity in there that created a situation that was very, very likely to start coming back on it. Yeah, that's when you went long. Cool. But you can see here, like on the long side, because if you're looking for a reversal, like you're looking for this move to retrace, for them to be like, no, this is no big deal, and we're going to retrace all the way back to like 110 even, perhaps, right? Well, it's slowing down quite a bit here at 26. There does appear to be a little bit more liquidity on the offer here at 26 that's taken some time to get through, if they get through it. Okay, so UK Conservative 1922 Committee Chair Brady says the expectation is, sorry, where is it? That they should have a new leader in place before the fiscal statement on October 31st. Okay. Okay, so a little bit of wrangling around 26. Starting to look pretty comfortable there. I do see some signs of possibly like an ascending triangle sort of a setup. like that there is some resistance here around 27, but that the market orders are slowly eating away at it, and that eventually they'll break higher. Tends to be the tendency, but you can never know because it just all depends on how many market orders there actually are. Well, so far we've had a really good pullback, but have we actually had a significant change in cumulative delta for the 10-year? Not really. I don't like that offer at 26 that showed up there as we ticked down, but we'll see if they tick back up. That probably pulls. You can see it's like nothing happens, right? Because there's a few ticks down, nothing happens. That doesn't mean that it can't move down or it can't move up. That just means that the pace of the tape is probably going to be slower from here on out compared to what the low was. Kind of increases the chances of that being the low, but who knows? In a situation like this, you might just have people that have to sell. I don't know. Sure seems like the 5-year is still kind of in sell mode. So I'm a little bit, I think that I'm feeling a little bit nervous here because the price seems to be going the direction that I'm expecting, but the market orders are not. It seems like the market makers are taking the hit. That's kind of interesting. Wonder why that might be. Well, about half of that at 26 pulled, but they're not really hitting it. Oh, somebody took all of it. Well, that 26 half one, that one pulled. And then they absorbed a hit. That still doesn't end up in a net buy. Like when you look at the orders that just came through there, so the buyers made a lot of progress and brought the price back up, but like the net market orders is about even still, right? So it's the bids are being substantially more solid. The offers aren't just getting out of the way. The bids are just a little bit stronger. Well, oh, and then there's a breakout. Let's see if that continues. So we still got like those 1200s all the way up to 28.5, right? But like it took hardly any volume at 27 for them to take that one. It seems like the 5-year could reverse hard if it was to go that way. I don't know. Reversing hard kind of makes me feel like the less probability of it going to happen. I still feel like this is very technical action. Like I think the read here, if we're going to expect future flows, is that we had a panicked sell because of the UK news, and now we are either rebalancing and or retracing that move because that move shouldn't mean anything, I guess you could say. So we are seeing here in the movement of the price seems to be in line with that theory. The market orders are not. The market orders may turn into buys though. But that's kind of why I say it's a pretty technical trade. Like we do have a reason to think that it could reverse, but I think that that it's really more the support saying that, you know, they couldn't hold these levels, that they were going to fall back here. But now that we've gotten to 27, the problem is that now that we've gotten to 27, there's a decent amount of trade here, right? They did break out, but there's still, they still need to make some significant moves here before, you know, I'd feel confident in saying like, oh yeah, this is a really good uptrend that's going to retrace this whole thing. So let's just kind of wait it out here. Okay, that was a good take. The 5 years, needing to coax a few orders here, I guess. Not a good sign. No. Okay. Which playlist has videos on liquidity holes? Well, so in the video about the stylized behaviors of markets is where I give the most detailed explanation that's not in a stream. If that subject interests you, we could go make a video where we go into the math on it. I think part of the reason why I don't feel like making like a full-on video about it is because it's really something that's better for you to read the original study, right? It was like walrus auction and to continuous time double auction or something like that. It was a study by Jean-Philippe Bouchot, so I had a rant about that whole thing on Futures.io yesterday because I was saying, well, there's more to trading than charts. Okay. And of course, people don't believe me. One person was saying, well, the more people that jump on a chart-based signal sort of a thing, the better. And so I walked through how the square root law of meta order impact kind of suggests that the self-fulfilling prophecy theory of technical analysis is likely false, contradicts what we know about the square root law. And somebody said, well, it was Tiger said, well, you know, like they're just researchers, they might not be traders. And I'm like, are you kidding me? We're talking about the co-founder of the most successful CTA fund on the planet. Didn't say it like that. But I kind of went on a rant. It was like, here you have these people. They're literally the greatest minds on this subject that we have. People that are making millions of dollars on it. Okay. Big fund managers, people that you would want to listen to. And retail traders are completely oblivious that it even exists. It's like you can literally go on archive and read the stuff for free. And retail traders are completely oblivious to it. What percent of volume are retail traders? It kind of depends on what market, but I haven't seen, and it changes over time. I haven't seen any metrics lately. So like what percentage of orders are retail traders in the 10-year treasury market? I don't know. I would think it's less than 5%, but I don't actually know. We just got here. What are you talking about? So we're talking about a couple of studies that you can read in the quantitative finance section of archive.org. One of them, the one that I was talking about specifically, is there's a lot of research about how the impact of large meta orders is not linear. So you'd think that, oh, if I have to buy 10,000 lots, I'm going to move the market X amount. So if I need to trade 2,000 lots, then I should move the market X times 2, right? And what we actually find is that that's not true, that it follows a square root law, which means that it would you trade 2,000, it would move the market more than the 1,000, but not twice as much. It would move it like three-fourths as much, right? Or one and a half times as much, rather. Right, not double, but 1.5 times as much because of the square root law. And so kind of what happens is, like, if you, let's say that you come in and you buy 10,000 contracts, okay? So now at the end of that, you're kind of reaching the end of your impact, and so your orders aren't having as much impact as they did when it started, right? So then if you turn around and you sell 10,000 contracts, the sell orders are going to suddenly start having much stronger impact because they're at the beginning of their impact, right? And so the net effect is actually, because you leave like this liquidity hole behind you when you do a big move like that, that sell is actually going to be stronger. So if you buy 10,000 contracts and then immediately turn around and sell 10,000 contracts, the market will actually end up lower than when you started, generally speaking. Is what they've found. So the whole idea that if a bunch of retail traders, the more retail traders can jump on the move, the better, kind of doesn't work like that, because they have to take their profits too, right? So it kind of ends up being a wash. And only the people that would get in on the signal at the very, very beginning would actually have an edge. This actually could be a program. Yeah. Well, so a lot of the way that, I mean, the funny thing is that this is how like all of the biggest funds in the world work. Like this science that I'm talking about, this isn't like some sort of niche thing that like, it's just, there's research out there and it just happens and nobody has paid attention to it. Like this is the basis of like every large index fund on the planet, right? Like the reason that we're able to have so many funds like this now since the 2000s, or well, you know, in the 2010s and 2020s, was because in 2007 or whenever it was, they kind of discovered these algorithms that improved their execution to take advantage of this sort of stuff, right? So all of these funds are kind of using this information to determine how to break their orders up to minimize their impact on the market. Right. Well, I'm gonna scratch it. Only made $10 on it max, so I don't think that trade was really worth it. But the thing is, it's not just that it's coming back on me, but like the volume continues to just be sell. Even though we came back up really strongly and the bids seem to be really strong, the volume continues to just be sell. So it was like I was saying, I felt like that trade was a little bit too technical anyways. Could I have taken the $10 from it? Maybe. Actually, it says I got 16 ticks at one point. Overall, I think I have to rate that trade as C, though, because the market went really strongly against me at first, right? I'm proud that I didn't freak out when that happened, though. I was surprisingly chill about it. So, oh, and we are having the S&P 500 starting here. Oh, is it not finding? Hold on. I didn't hear my sound. Did you guys hear the sound? I don't remember hearing the sound. Maybe the sound did go off 2 minutes ago and I just wasn't paying attention. When the S&P 500 started, did you hear the sound? I was just thinking your bell didn't go off. You know, that's kind of weird. So hold on. If we come back here to Ninja. So the other day, I was having trouble debugging. Well, I reinstalled NinjaTrader to try and deal with that. it didn't do anything, but then I found that it had something to do with the DX feed DLLs. But I haven't been, people weren't interested enough in that, so I canceled the subscription on that, and so I just deleted the DLLs, and then that fixed my issue. Well, the WAV file is there. It's drawing my line. It might have been that there was something else happened at that time and it like ticked, and so it didn't go off or something. Like if they went right after one another, they might cut each other off or something like that. Or maybe it has to do with my routing. I'm not sure. We'll just have to keep an eye on it when it's time for us to quit. Should do some writing today so that I can record tomorrow. Tempted to go long today in ES. So here's my issue in ES. Of course, I'm not very good at predicting the flows in ES most of the time. So we don't have a strong enough catalyst in the ES for me to really have a strong opinion about which way it's going to go. And I think that a lot of it is noise. But the one thing that I do have is that we've got options expiration tomorrow. And so I think that the options expiration tomorrow could make it very difficult for them to move too far away from 3,700 without any kind of big catalyst, And we're looking at it, they're opening like almost right at it. So I kind of suspect that it will just be like really chippy action. You know what I mean? I kind of suspect that they'll just continue to get really chippy action. So I am seeing, by the way, that when we start to get into this 24-22 zone, that market orders start to come in. It's still falling and the sellers are winning, but there's quite a bit more pushback here than there was up here. Yeah, you guys didn't hear it either. That's really weird. I do see in my Ninja script it printing out the location of the files, so that suggests to me that it did try to play it. So I don't know. Okay. We're kind of at a decision point. Some of the things that I'm seeing in the volume suggest to me that they will actually come short of the lows here, but I think that's way too speculative for me to try and trade on it here. So you see there's an iceberg there, 22.5 for instance. And then that ticks up. That one's kind of interesting. The micros are not responding quite the same way to the flows over here at the moment. It's a little curious. Let's kind of reset and center things. Maybe I'm not seeing things clearly. No, there's a tick down. Tick up doesn't hold. Did take out 650 though. Now it's kind of going dead again. Two ticks up. 3. One more and it would be like a breakout. Kind of getting those bids being a little bit absorbent again. Okay, so there's a breakout. All that means is that they came out of the top of that range. It doesn't mean that they're going to continue forward, or that if it doesn't continue forward, it'll be a false breakout or anything. And we're just kind of benchmarking here and where it's been relative to the recent past, to get an idea of like the pace and the amount of volatility and stuff. Excuse me. My lips are super chapped this morning. I'm peeling like a snake. I am seeing like there has been more responsive buying volume here since we've gotten to around 24, but it's not super strong. Like it's not enough to have shifted around the trend here in the 10-year, for instance, and certainly not in the 30-year. The 30-year has seen a couple of really big sells. Sorry, the 5-year. Nathan Tankus, I think this is true, which is why I think the left-wing response to this whole circumstance has been a disaster. Live by the perceived rejection of bond markets, die by them too. Suggesting that the left saying that the market doesn't like the conservative ideas could be dangerous because the market might dislike your plans too. Right? Mohammed El Arian, I missed this. The most interesting aspect about the immediate reaction of the UK markets to Prime Minister Truss's resignation is the lack of any major reaction. Is that the case? Because I mean, the bond markets were kind of moved. Several reasons for this, if you should be extrapolated, I suspect it's only a matter of time until markets look to what's next. I don't know about that one. There's I'm gonna respond to that one. Do I not know how to... Oh, there are 2 Grees in aggressive? Okay. That'd be so cool if Mohammed A. El Arian responded to a tweet of mine, but I doubt that he will. I doubt he even reads his comments on his tweets. Let's get Johnson back then. So answer me this, you guys in the UK. Are you? I don't think any of you are actually in the UK, are you? But you're in Europe, so you might have better opinions about it than myself. Is Johnson the one to bring back? Because it kind of felt to me like that Johnson didn't really know how to deal with the problem. That's why part of why he resigned because of like scandal or whatever, right? It was because of a mass scandal, wasn't it? He's got cool hair. Well, that might be a reason to put somebody into office. It's probably why I'll never be president. Although Evan McMullen, he stands a chance at winning. I don't think he's going to win. It's probably not going to win, but like he's competitive and he is bald. So maybe there's hope for me. I don't know. I don't think I want to be a politician. There was maybe a time where I would have liked to have been a politician, but since then I think I've kind of decided that one, I don't think that politics is really the place to make a difference, and two, I'm not so sure that my particular disposition would actually be good for politics. So. You know, something that's kind of weird to me is that a lot of the time, you people on stream, you'll say this thing. You'll say, wow, you're so calm. And sometimes during trades, I am really calm. Like that first one, I'm surprised I was so calm. Like, really, I'm surprised I was so calm. This one, I could start panicking. I'm not quite yet. We are maybe seeing the volume turning to the upside, though. Anyways, but I'm not a calm person. So like I can think of almost every day now, it seems like I can think of times where like I'll say something to my family and holy shit. Did you see that 8K stack there at 24, was it? Okay, but you know what? This is, well, no, it's not quite the same time. It's a little bit earlier than we've been seeing, but that was a 7,500 bid. And it sure pushed them up. Well, it's helping us for now, but I'm a little suspicious. Anyways, I think that I've maybe traumatized my wife too much by like, because I'm not saying these things to be mean or anything like that, but I think that the way that it comes out is a little bit too biting, I guess. And so she's not sure if I'm like, sometimes how to react. So like yesterday I was like, what are your plans tonight? And I think she was thinking like, oh, he thinks I'm going to be wasting time or anything. I was like, no, it's just I'm not feeling very well. I don't think I'm going to work out. So you should take advantage of it. Right. So like I continually see in my daily life situations where I don't have as good impulse control as I would prefer. Basically. So it's always kind of weird to me when we come here on stream and people say that, oh, it seems like you have really good impulse control. Because I'm not so sure that that's true. I don't feel that I have super good control over my emotions and impulses. I am on my Adderall when I'm trading, so that helps, but okay, they gonna touch 27 now? I mean, they still got a ways to go before they're at the highs from the last swing high, but are you catching some of this in ES? So are these correlated? gonna say maybe. It seems like that both the treasuries and the equities are kind of coming up at the same time. But I don't know about this one. Where was the bids at? 24? I don't know. When we bid up there, it was awfully quick, wasn't it? I am seeing though that the flows have shifted to long, at least on this leg, in all three of the treasuries. So that helps. I am kind of starting to think though that in this kind of action that if I get something that I should just take the profit. I don't know. So there's they went through 24. They didn't break through it, but it's kind of sketchy. Wow, Anthony Crudelli says, what separates successful traders from non-successful traders? And he had 284 comments on that. I'm going to say luck. In all honesty, I think a large part of it is luck. That there are certain people that did okay at the beginning, and then that allowed them to keep trading long enough to figure things out. And other people, they might have been even better, but because they saw initially trouble with it, they gave up quickly. Well, we did trade down through the 24 here now. It's exactly what I was worried about. I think I'm a little slow on the draw here. And now coming up to 24. I'm not taking it yet. They might do, but we're showing a little bit of low latent liquidity there at 23.5, and then the offers came in and it's like, nope, we're definitely selling. We're definitely selling. Well, that's kind of weird. Maybe I'm just seeing things, but it sure seems to me like that the micro yields just ticked down like 3 or 4 ticks without any accompanying changes in the 10-year. Maybe there's some volume coming through on the actual cash exchanges. Now they seem to be behaving appropriately. Not getting anywhere on that with that 23 though. It's pretty good bid sum also. Well, okay, then never mind. The offer pulled. Never mind. Never mind. It's all just noise. It's all just noise and shenanigans. I feel like that when I see a spoof like that, that I should just immediately get out and not trade. I feel like that trying to hold a position or trade out after it kind of like encourages them. Because at this point now it's been 3 days in a row and it's been like the same pattern, right? It's been the same pattern that eventually you get a big move because of the spoof, but then afterwards eventually they come back through and there's nothing there. So it reeks of market manipulation, doesn't it? Okay, well they took 24 again. That's good. Don't care if they come back now, but you hope it won't. Well, no, I think it's... I don't know about the treasuries here. The treasuries might try busting out here still. It's hard to say, right? It's hard to say. But the equities, I'm definitely, looking at that and being like, if I had gotten 10 to 20 points, I'd probably be pretty happy with it, This has been choppy over there. It's like very wide volatility, but it's been choppy over there. And we've basically been rotating around 3,700 the whole week, right? This week has been gone by fast, by the way. That's a little back and forth across 24. Seeing another little run in oil here this morning. Ooh, and copper's looking good. Is copper the big winner today? Yes, it is. 2.6% copper. Good for you. Who's the biggest loser? Natural gas, followed by the treasuries. Overall, though, markets are positive. I'm still kind of seeing some buy volume in the 5-year. You ever trade? No, I've never tried trading copper. I'm really interested in copper because I feel like that copper is like, so I think it's interesting to trade like more a pure commodity, right? So a lot of these like a lot of these things are, well, you got financial instruments, that's kind of a different thing, or you've got like cash settled things like the equity indexes, right? So then you've got oil. Oil is like a pure future, but oil is like crazy volatile and does all this other sort of nonsense, right? So like what would be your next if you wanted to trade like a pure commodity? And I think that, well, I don't think that you would want to do like silver and gold because a lot of the volume in that is based off of not the supply and demand of the commodity. So your next choice would have to be copper. So I'm always kind of keeping an eye on copper with the idea that, hey, maybe someday I come across information that allows me to be confident in trading copper. So I kind of keep an eye on it. But I often don't know what it's really going on there. So there was I forget the exact headline, but there was it had something to do with like some production thing in South America or something like that. I don't remember where it was, but there was some news that was basically positive to copper's price today, and that's why they're moving up. Probably why they're moving up. Rather. 1,700 at 24.5 pulls back to 1,300, but still to have us bid and there be 1,300 there is significant. Bid and offer both pretty strong. Okay, they took the offer, didn't hold. Well, this action right here is not very indicative of a strong trend up. This is kind of more indicative of we're going to get stuck here for an hour. You know, normally I don't care about like the individual stocks and stuff, but because of Tesla's earnings yesterday, that might be a key driver behind what we're seeing in the E-mini today, huh? Diving back to 04. Hey, they took 24.5 again. If they're going to continue this, they're going to have a strong bid at 24.5. Well, Tesla's still a large enough part of the index that it ends up being pretty instrumental in where we go, right? Man, every time I turn over here and I look at copper, because copper's just skyrocketing here. Just looks like such an amazing trend over there in copper today. Existential, what does that mean? It means like as relating to one's very existence. So like an existential threat is this threat that threatens your very existence. Or existentialism is a philosophy about your very existence and what it means for the meaning of life. Not a strong offer, but they did take 23.5, and now there's some orders hitting at 23. And here we've got the news. New home sales coming in here, so I think that we should. Okay. Too late for me to do anything. U.S. existing home sales change. So existing home sales, not a big change. Was negative 1.5 versus negative 2.14. So overall, I'm gonna say, well, the market doesn't seem to care. Market doesn't seem to care. I don't know. Couple of ticks up there now. Wonder if maybe some people were holding on for that piece of news. I kind of totally forgot about it. And now that they had that, they're like, well, it's not big enough. Maybe it's time to exit our positions because we're not going to get any more from it. Existential is also a logic quantifier, roughly translates to as for some or there exists a. I wonder what the context that it was being used here that Jim Uriah was like, that you guys seem to use that word, but I don't know what it means. I think the real take there is that people are way too concerned about existential threats to whatever. Like we're talking about how awful things are all the time nowadays, right? Do you think there are more liquidity holes formed because of algo trading? I'm going to say that I don't think I have any evidence to suggest that algo trading has anything to do with it. It is a empirical property. It's a tendency that a limit order book just has when too much trades too quickly, essentially, right? So I don't think that the existence or lack thereof of algos in the markets would have really any impact on it. It just comes down into this situation where too much trades in a certain spot to where somebody has too much inventory and they can't really offer more liquidity anymore. I kind of suspect that big order though that we've seen around the top of the hour the past 3 or 4 days now that will like stack and then almost immediately pull. Probably a robot. Probably a robot. And it kind of makes me mad that there are still people out there that will decide to play those kinds of games. But you know what? They're probably going to get screwed over by it at some point. They're making too much of a racket. They're making too much of a racket that eventually somebody's going to come for them and screw them over, right? Somebody's going to be like, okay, I need to sell a whole ton here. So I just need to wait for that big guy to show his bid and then hit him. You know what I mean? I'm sure that eventually it could happen. Well, yeah, after the news here, right back up to the high end of the range. Now, they've had some trouble getting above, let's say, 27 to 28 area. But the 5-year, the shift in volume in the 5-year is looking pretty strong now. In fact, with the way that this is played out, I wouldn't doubt there are some trapped traders in the 5-year. Because it was a lot of so like we had that initial push to the lows, right? But like the 5-year continued selling through that whole thing, right? And now we're moving higher. So that's about 5,000 contracts underwater. Now maybe it was just somebody dumping that they had to get rid of it. They're exiting a trade or something like that. So I don't know if that really translates to trap traders per se, but that's the kind of the setup that an order flow reader would be looking for trap traders, right? And the 5-year is definitely the one pushing it and leading the way, which was also kind of what we were saying when we were like, if they do have another move up, maybe we could see some steepening. We are seeing some steepening here on this move. The big guy will simply report it as an error trade and he will get away with about 90. No way. Can they do that? No. No, I don't think they can do that. You can't stick an 8,000 lot bid out on you can't put an 8,000 lot bid every day at around the same time and then when it finally gets filled say, oh, that was an error. No. But maybe they don't actually look at that. You would hope that somebody at the CFTC is looking at it, right? But all I'm saying is this, Akshay, when you get something like that is that big, people notice, and it usually doesn't last for very long. So I can remember very, very early on in this stream, before you discovered us, for instance, one of the funniest ones that I saw was that there would be this it was like an ignition algorithm that popped up into the treasury market, where like all of a sudden it would just come in and buy this huge swath. And the first time that it happened, like the market really responded strongly to it, right? And so it just kind of started to become a regular thing, and like the markets started to just adjust for it. They knew that it was going to happen. And then one day they took it and the market like immediately went the other way. I think that maybe there was some news. He says, oh, they won't be able to do it for long. Someone will burn that. Yeah, probably. Anyways, I think that there was some news at the time or something. Anyways, they took like the wrong trade and got, it moved up, and then they like bailed, like somebody was like forcibly puked out, right? And I suspect that it was the igniter got puked out of his trade, and then we never saw it again. And it was so much nicer to trade after that guy got taken out. And so in my mind, it was somebody trying to manipulate markets, eventually got caught, eventually got screwed over. We're here in a key area for the ES. Well, we are up. We are definitely up in the ES. How far else do we get? Well, that's overnight highs in the ES. Next pivot area at 3740. Let's say 3750 for even numbers sakes in the equity indexes. Now in the treasuries, we did have a significant breakout by one tick. By one tick though. So it was probably the SoftBank guy again. He's been awfully quiet since Massison apologized. I don't know. It kind of makes you wonder who would try and do something like that, especially in the treasury, Because I feel like you have to be a little dumb to do it, Like, people have already been prosecuted for spoofing. It's such an obvious large spoof. I don't know. But the other thing is, it could be somebody really desperate too. That could be another explanation. Somebody either really stupid or really desperate, right? That they need to they just have a ton of contracts that they have to finish selling or something like that. Those are the only explanations I can think of. So you read the pattern right? I don't know if there's really actually a pattern there, man. Oh, you know what? I set up that. Remember I was telling you we were like back tested that thing. I set a chart up to auto trade it, and I totally forgot about it today. We could try running it tomorrow. We'll see. Okay. NASDAQ up 1%. Or someone is trying to load up on a 4% yielding US bond for 30 years and is trying to keep the pressure up for as long as he can to accumulate as much as he can. So if that was the case, wouldn't you want to be putting out a massive market offer? You know what I mean? Larry Summers, the terminal rate according to the federal funds futures has just risen above 5. This is kind of a milestone, but I think it is more likely than not to rise more. But the increase already of more than 400 basis points in an 18-month period is surely most of the increase we will see in this cycle. No, you just want the market to think you are a seller at a certain price, not tie up margin. Right, but putting the bid out makes the market think that you're trying to buy it. Or at least that's what the algorithms think. I think if you're sophisticated enough, you could just put out a large bid, not necessarily with the intention of trying to boost the market up or down, even though that does happen on a short-term basis, but with the idea that after the shenanigans, you'll see a bunch of volume on both sides, and that might help you. So maybe you're right, actually. That's kind of the frustrating thing about all this, though, is right, we can't really know for sure what's going on. Put in a quote bullet, you took away implied liquidity, which side doesn't matter. Yeah. The net effect is that it kind of makes it more likely to get a little bit of a hole there that where price could stay there for a long time. Yeah. I still think that it would be better that you put an offer out there, but I think when you like put an offer out there to spoof, that's much more of a short-term trade. Whereas Akshay is saying, oh, this guy is trying to you know, gulp up a ton that they're just going to hold for a really, really long time. So this is a really long-term trade. So that they move up or down 4 ticks at that exact moment doesn't really matter to them, right? Offer runs the risk of being a hit and you locking in. Okay. Yeah, sure. No, that makes, yeah, I think that's fair. In other words, you put the big bid out there, mostly because you kind of want to screw the market around a little bit and keep it there. But if your bid actually does get hit, you're totally okay with it. Sure. I think that's a good theory. I like the theory that it's some shithead at a hedge fund that thinks they're going to get away with it more, but it's probably not. It's probably not the most likely scenario, actually, is it? So we have to assume that somebody is just really greedy and stupid to think that they'll get away with it. The thing is, though, is that like, especially the thing is that bleh. Am I losing it? Am I losing my touch with my brain here? I'm having trouble using words all of a sudden. They're bidding 7,500 contracts, and they literally only put it up there for like a split second. They'll put it there, the market moves away from them, and then they cancel it. So it's definitely seems to be placed with the intention of manipulating the market. But I guess, you know, the way you could justify it is you could come in and you could totally be spoofing. But then if you come and investigators come and they try and prosecute you, then you just say, well, I was totally willing to buy. Wasn't actually a spoof because I was willing to buy. Right? Could be. Also, seeing it happen like around the same time every day for several days in a row does, I think, lead credence to the idea that it's a longer term trader. Maybe. I would think that if it was a short term algorithm manipulator sort of a setup, that you would be a little bit more random about it, you know? I also think you'd want to be more discreet, but whatever. Listen, these algos, they can come out and they can put like 500 contracts on there, and it was spoofing with that all the time. Nobody cares. Regulators don't bat an eye. Okay, but when you start putting 7,500 contracts out on a market that only has 1,000 right now, right? Someone's gonna look into it. Yeah, think of it this way: the CME says about 1 to 2% of the total volume. Yeah, that's true. That's true. Well, but what that says to me, well, I think the suggestion you're making is that most of the volume that you see in the treasuries is just quote unquote trading and is not long-term people. I think the stat that you would really want to be looking at is how much does open interest change on a given day, right? Because it makes total sense to me that there are people out there that want to hedge and even want to hold something for the duration of a contract, but don't actually want to deliver it, right? But even if we were going off of my alternative metric, it's still not very many contracts stay open overnight, right? 150k UB means about every day, so it translates to about 900 million of delivery. So if someone is trying to use it to take cash delivery, it will take a few weeks. By the way, we've got a couple of really good continued upticks here. So it kind of looks like we may be to our stop. Oh, fine. Come on. Thank you. I'm just kind of looking at this, feeling it. Puts us back positive on the week. So it was a really interesting trade today, don't you think? Because it's really kind of counter to what I usually like to do, right? Like seeing the move down like that and everything, you know, I would probably be looking to only sell. But my read on that situation was that they were probably going to retrace. It was kind of a fraught trade. There was many points at which I thought about getting rid of it. There was many points at which I thought, okay, I've gotten this much. I should just bail now. Now I'm sitting here looking at it and I'm like, should I have held on for even more? Well, it's possible. I got out because I know that 110 is such a roundish number that there's going to be a lot of liquidity there. That's why I got out there. How many more buys are coming behind this? Who knows? If we get to 0.5, I'm going to bet there's going to be a little bit more profit taking. Pretty cool how these squeezes work. Yeah, so do you think that this extension from 106, like looking at it in the 5-year, because that's the one where it seems like it's the most clear and extreme. We saw quite a bit of volume come in long now once the 5-year got above 106 and started breaking out there. Do you think that was the foretold trapped traders? Could be, because the volumes that I'm seeing here right now don't necessarily suggest to me like a large meta order long per se. Like they're not like, oh, somebody was always planning on buying it today and or whatever. This kind of looks more to me like people being short and getting stuck, and you know, because there was just too much. The reason why I took the trade that I did, like my logic thinking here. First of all, I felt like that the downside action that we saw off of Liz Truss kind of didn't really make any sense. Okay, so that was my first thing. Okay, so I think that's maybe what had me initially looking for a long short yields. But then the order flow at the bottom was like so fraught. Not here, down here at the bottom, it was so fraught. Like these 13Ks down here at the bottom, that traded all like within a minute. It was just so much volume pushing down, and the bids weren't getting out of the way either. So there was absorption, which I think this is the first. Actually, there was another one earlier in the week or last week where we were kind of saw some absorption, and that kind of encouraged us. It's been a long time since I've seen like the liquidity win. You know what I mean? It's been a long time since I've seen the liquidity win, especially the buy side liquidity win, you know? It's been lately that the buy side just like jumps out of the way. But maybe it makes sense because like for instance, Jeffrey Gunlock last night, he was saying that maybe that's as far as it can go. Like he was saying, like, look at how flat the upper end of the curve is and how screwed up the upper end of the curve is. And that suggests that that the market can't take anymore, basically. That the bond market can't take anymore. That's as far as they can go for now. That's kind of what he was suggesting. So maybe it is the case that there are some people stepping in and buying here now, right? But so there was a lot of factors, but it did kind of end up being more of your classic order flow setup, isn't it? Strong move down, absorption against the move, trapped traders take us back up higher. Maybe that is what happened. Although there was, well, and so here's another thing about it that was kind of interesting was that we had this move. This is where we took our original trade and kind of like bailed on it. I think I got in somewhere around here on this second one, right? This came back, I got back in, got a slightly better spot. But then there was this spot right here. So they did kind of run into like an area where they got stuck, let's say. But when you try and measure it out, okay, they came up to that at about 8:05, and then they went at about 15 minutes later. Oh, it's only 8:30. That's funny. Okay, so maybe somebody was hoping that it was going to stay there and that they could get out, and then it kind of moved and they had to chase it, right? But at the same time, oh man, I caught such a good spot here at 111, right? Well, we knew that it would do that because it's a big round number. I'm actually seeing some cumulative delta come back down now in the 10-year. What about in the 5-year? Not so much in the 5-year. Not so much in the 5-year. So that makes me a little wishy-washy on if there can actually be continued action up. I'm leaning towards that, that's maybe not the high per se, but that it will start to chop around 110. And that we'll see a little bit on both sides of 110. That's kind of what I'm thinking right now. But it was a good trade. And what price did I get out at it? 4133. So it looks like there was maybe a few ticks more in it, but if I'm within 5 of that area, that's a really good exit. So it's good. But so to sum all that up, too long didn't read was a very technical trade. It's a more technical trade than I'm used to, but it was good. I played it really well. And I think the thing that I liked the most about that trade was that it took a lot of fortitude to stick with. But I did it. And I did it without really freaking out or having any issues. I was pretty chill about it the whole time. So I'm pretty happy with myself about that, because that's the mental side of it. And I'm in my head a lot lately because I'm a little bit discouraged on the YouTube channel and kind of rethinking my approach to the YouTube channel, I guess. And so that would be the sort of thing that would kind of make you a little bit like fear of missing out on things, and your own insecurity is kind of coming into the trade. But that didn't really happen. But maybe it is the case that this introspection that I'm doing is having the net effect of making me a little bit more free. Because even though I am maybe I'm changing my expectations for the YouTube channel a little bit, but kind of
more the bigger thing is that I'm just saying I don't really care. Like, I want to just continue to do my best at it, and how it performs doesn't really matter, you know? It's just that I know that that's not true. Like, at some point, yeah, like, here's the problem that you have with trading and in general, right? That I see all the time, because there's a lot of people that are focused on the psychology side of it, right? And they're like, well, you do all the psychology and you got to deal with your childhood issues and make sure that you're not self-sabotaging and all of that sort of a thing. Okay, so you do all of that, but then you still have a strategy that is basically random, right? And is maybe only making money from taking on risk, and you eventually blow up. Like, at some point, you have to perform, right? At some point, you have to actually perform. And if you're not actually performing, like, what are you going to do? You're just going to go dive more into your psychology? No, you have to actually have, like, edge, you know? And so that kind of letting go doesn't necessarily help you if you don't have edge. But I think that I've already firmly established pretty well that I've got something, and that I just need to be I need to get as much out of it as I can when it's working. To a degree in psychology, isn't it? Well, my wife has a degree in psychology. I keep telling her, you know what you should do? You should become a performance coach. But I don't know. That doesn't really. You know what is this is another thing. Okay, like, as a man, this is really a man thing. As a man, you will often have to find yourself just relying on your own energy, right? I think that it's really easy to want to come in and be like, well, I need my wife to do X, Y, or Z thing for me to feel like I'm in a place to be able to do the thing that I want to be able to do, right? But the reality of it is that that's quite contrary to the way that men and women tend to act. I mean, it's not like all men are that way and all women are that way, but the general way of it is that the man tends to be the aggressive and motivated one, right? And you're the one that kind of has to, that's more to inspire the woman to go out and get them when she needs to, right? But then the other side of it is, like, it's really hard to motivate a woman that just had a child. You know, she's focused on the baby. That's what she should be focused on. You know what I mean? So I want her, I would like her to be in a situation where she doesn't have to go back to work and be a flight attendant, but I think she wants to finish it out. I think she wants to finish out the last 5-10 years or whatever it is before she can retire and have flight benefits for life and everything. So we'll just have that be the thing. And it is still the case that maybe the YouTube channel brings in enough revenue to, you know, that we could put a lot more time into the YouTube channel. It's just, that's not the main goal. There's a lot of competition. It'd be really hard. So all we can really do is just make the best content that we can and hope that it works out, right? When she, no, actually the girls have been helping with the kitchen as much. You know what, man? I tell you what, when my stepdaughters are interested in selecting what we're going to eat and shopping for it and helping to make it, it's so much easier to get things done, like dinner and so forth. That helps a lot, because my wife's not a cook. Not that I'm saying like she doesn't know how to cook or anything. It's just I don't think that's what she enjoys doing at all. It's kind of an interesting thing, right?
she's a flight attendant. So, you know, if you want a good host, you're going to throw a party, you want a good host. That's what she's good at, man. That's what she's good at. She doesn't really enjoy cooking. She doesn't really enjoy cleaning either. My mom always said that that's the trifecta of womanhood: cooking, cleaning, and looking good. My mom, she loves to clean. You know, obviously she's good looking, so what does that mean? She's not a cook either, you know. Maybe it's better that way for me, because I could probably put on a lot of weight really easily now. When I was younger, it was like, man, I couldn't do anything to put on weight. Now, if I wasn't active, I think I'd probably be a little fat now. In fact, I constantly find myself feeling like I need to do sprints to keep the visceral fat down. Treasury's down a good clip now from that spot, so I definitely did the right thing. We still got 30 minutes though. Wow, really? That reminded me of my plane tickets I booked the other day. Economy class tickets were the same price as the business class back in August. Dude, so like one of the things that's kind of been really great about flying in the era of COVID is that we have flight benefits. So if you fly to another country, you have to pay the landing tax, but otherwise I can fly anywhere that I want for free. I could probably make tons of money from that fact, and I'm not quite exactly sure how I should be doing it. Maybe it's like I should be having a travel channel and I can just travel anywhere in the United States to look at things. I don't know. I don't know what it is that I'm supposed to do, but I digress. So we fly occasionally, and we've even flown recently. Where did we go? I don't even remember where we went. So I got stuck. Oh, it was when we went to Oklahoma. Yeah, it was when we went to Oklahoma. Get the no, you can't give them to other people, unfortunately. Anyways, so if the first class seats aren't all taken, they'll upgrade you first. So the last few times that I've flown, at least one of us has gotten in first class, because there's just been a lot less people in first class. Yeah. It's kind of nice. The first class seats are a lot better than they really are. I don't know if it's worth the money, but, or at least if it's not valuable to me, but it sure is nice. It sure is nice. The other thing that my wife likes to do is she's crafty. So you know what she's making right now is she's making, she's got like water bottles and stuff, and she's going to put stickers on them. So that should be interesting to see how that goes. Maybe she'll have some time to work with that this week. We'll see. We'll see. I got tomorrow off, so I've got things to do. Should I? Oh, you know what I need to do on my list here? I'm gonna write this down right now. Is I need to look up. I need to like schedule test. So I've taken 5 practice tests. It seems like that on some tests there's like different subjects, so I'm afraid that they're going to keep introducing new subjects every time, and that I'll feel like I'm only barely passing the whole way. So maybe I need to give myself a little bit more time. Like, I could probably take 2 tests this weekend. I could take one tomorrow, and I could take one on Friday, right? And I only have 3 left. So that gives me 1 practice test, and then I guess I should probably go back and review some of the tests before I take the actual one. So let's say I do it. Man, today has gone by. Been an interesting day. Okay, so if I do 1, 2, and then 3. So then I could take it at the beginning of November. But let's say I give myself like 2 weeks. So yeah, let's say I try and take it like on the week between, like the week before Thanksgiving. I think that would be a good goal. But I need to go and find the test center and find how all that works. I looked it up at the very beginning, but I don't remember what I had discovered, so I need to go back and look at it again. How much it is and all that stuff. And then I could be an investment advisor. But then the problem is that I have to set up my own investment advisor company and like register with the, I probably need to register as a federal covered advisor, because then I could give you guys advice. Wouldn't that be cool? That would actually be kind of unique, wouldn't it? Is like we could get here on stream and I could be like, okay, I will advise you live on stream, but here you have to fill out this form first that gives me some information about like what your goals and needs are and your risk tolerance and so forth. And then we could do some advising. And you could pay me like $5 or something for it. That would be fun. Wouldn't that be fun? Because I don't think I want to do anything where it's like I'm actually like handling transactions or anything like that, right? I think I need another license for that one. No. Just investing. It would mean that I would be giving more advice on investment advice, like saying, okay, like here's how much you're contributing to this and this. Now you're really old, so maybe you should have more bonds in your portfolio. That sort of a thing, right? Do have to say that tweet yesterday. And just where was this? Let me go find this again. Where was it? Come on, here we go. Jeffrey Gunlock, here's where we are now in the U.S. Treasury bond market. The 2-year is at 4.52, the 5-year at 4.37, the 10-year at 4.13, and the 30-year at 4.13. Note how the long end is flat. Sign of yield increase exhaustion. His main conclusion, Treasury yields may well be peaking between now and year end. This, the bond king, Jeffrey Gunlock, suggesting that we may be at peak rates now between now and December. Well, we keep getting all of this craziness from the UK. It might not necessarily be the best place to buy, but and of course, if you held bonds this year, it really, really sucked. But you know what? Maybe going forward, maybe having some bonds in your portfolio, not such a bad idea. Not such a bad idea. And, I think that we'll have quite a bit of rebalancing to go in 2023 and 2024. But then after that, it is my hope that we can go back to the money is free forever regime again. That would be fun. Would it be fun? I don't know. Kind of seems like that with the demographics that we're probably likely to move back into that area once the world is kind of rebalanced from this like move away from globalization, right? The same Jeffrey Gunlock who was telling everyone to buy bonds with UB at 220 because deflation is coming for the next 10 years. Oh, I don't remember that. Talked about that ourselves yesterday, talking about the forward contract price. Right. Well, right. The way that the short-term contracts and everything are looking really do suggest that the market thinks that we're close to peak rates, that rates are going to peak this year, basically. Yeah. It does really strongly suggest that, doesn't it? But the warning I would give on that one, though, well, on all of this, is that could all shift really quickly, right? like we come out and November CPI is even higher than last month, right? That might shift everybody's expectations. And definitely if like in December CPI is still really high, or we start coming through here and the Zillow rent index starts going back up. That's that sort of a thing, right? Like this, it could shift really quickly. It would be like on a dime. It's kind of interesting. Like I never really realized, you see this with stocks, right? With stocks, it's like when we're moving up, it's like a slow grind. And then when we move down, it happens really, really quickly. And then down at the bottom, there's all this volatility, there's headlines and everything. And then the craziness goes away. And then like that's the bottom and it goes up, right? And so there's kind of this difficulty with options where, like, you know, when the market's going up, you can buy options, call options for cheap, and that maybe works. But then when, like, or you can buy puts and you can predict the downside. That's really great. But then once the downside has already happened, the options are so expensive that you kind of have to sell them in order to really make money. And then that entails a lot of risk, right? Well, it's kind of the same thing here with the bonds, which is that when the bonds fall, they have fallen really, really hard, and it's very, very difficult for many holders to hold on to them. So there's plenty of these people in these pension funds that would have preferred to have held on to their bonds instead of having to sell them for margin calls, right? So it's kind of like you want to come in and buy the bond, but then it falls further and you get slaughtered, right? I feel like that the moves up in stocks are a lot faster than the moves down. It doesn't look healthy, really. Well, let's come in back and look at a chart. Because I think that when you really look at the higher view, you're gonna see that it's really just there's a lot of volatility, right? So look at this. You see this thing down at the bottom, which is average true range. So you can kind of see here, 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 here. Okay, so what do those coincides with? Bottoms. So when we are falling and we're getting down to the bottom, that's when you start to see a lot of volatility, right? And the one area on this chart where like volatility really decreased right there, right? It was this. So, but you are right in that there have been many really big up days lately. Yeah. Because we're just in the overall volatile area. Because really what's happened is in this move, like especially this latest move down that's been happening since about August, I would say, right? When we kind of peaked and turned back down, right? The thing that's been most characteristic of this market is poor liquidity just across the board. I mean, it's the most obvious in the treasuries. To be sitting here still and them only putting about 1,500 up there is like really sad. And that's really, really sad when you consider that like it was worse last week. Last week they were only putting up thousands, and the bids were a lot more flighty. Today they've actually had some absorption and the bids actually won. That's the first time that that's happened in a really long time, right? A really long time. So that means that whichever way it's going to move, if it's up or down, it moves really big because there's just not a lot of liquidity out there. So do you think the main factor to this is balance sheet reduction? I think that there's a, you know, the reality is on this particular bear market is that there's been a little bit of everything, right? So part of it was that we were in a bubble, right? So earnings estimates had to come back to reality because they were a little crazy. And a part of it is that stocks are really high because of stock buybacks. Okay. And then you're raising interest rates, so all of the valuations get adjusted from interest rates. There's not as many stock buybacks, so that hurts, right? And then on top of that, companies aren't doing very well this year. And even if the Federal Reserve was kind of keeping interest rates high and everything, I think that you would still see some businesses struggling. And then you've got the energy crisis thing going on. I mean, it really is a case. This is kind of like think about this, because I guarantee you what I'm about to say here is going to be like not what you expect. This is another like warning, unpopular opinion. Okay, just about everything has gone wrong this year. Okay, interest rates are rising. We've got problems with energy. And then the politicians that are in charge are just been completely inept at dealing with it. And this has been going every step of the way. The Federal Reserve has screwed up every step of the way on this move. They should have done it earlier. Right now, maybe they're going too fast. It's just like every step of the way, there's something to criticize, right? There's like, can you really think of a stronger confluence of just a lot of bad things happening all at once, all within 1 year? And yet we're actually only down 20%, which is like your average pullback, bear market, etc. And nothing is broken yet. It's gotten ugly, but nothing is like completely broken. I'm not coming out of this thinking about things like in 2008, like when we had 2008, we're like, well, this is going to have repercussions for a really, really long time, right? But we're still kind of sitting here being like, well, after 2024 goes away and this all blows over, and then maybe we can go back to easy monetary policy again, you know? So does that mean that there needs to be more chaos before this market can end? Or is it that the financial system is much more stable because of the reforms that we put in place during the 2008 crisis? And I would argue that the latter is a very strong possibility. I think that the markets are significantly more stable than they have been in the past. And the fact that just about everything has gone wrong and it hasn't completely fallen apart yet is a strong testament to how effective those changes have been. And let's just hope and pray that it doesn't get worse. Right? Because as strong as the financial system is now, there's still a point at which it'll break, right? I see a lot less TikTok millionaires charitable enough to share their strategy with me for $99 a month. That's a big plus this year. Oh, there you go. It's true. It's true. There's a lot of... Well, you know what it was? It was like all these kids. Look, you should be like me. That's what it really comes down to. If you're like a 19-year-old kid and you're like, hey, I'd like to start a YouTube channel and everything, then yeah, do it like me. Come in, give your opinion, show your trading, but don't come in and be like, I'm an expert and I'm gonna sell you all of my stuff and, you know, do like the turbo business plan. Ugh. There's way too many kids tried to do that. Like during the pandemic, they're all like, oh, we're expert, you know? You've been trading for a year. You've got a room now. Are you effing kidding me, man? Oh, man. Because let me tell you what, you can have just a completely random strategy and have like a lot of success with it for 2 years before you find out that it doesn't actually work, right? It happens all the time. And I don't necessarily try to hold myself up as an expert. I guess in the end, I've become an expert on market microstructure. And that's only by virtue of the fact that retail traders don't know a darned thing about it. Because the reality is I'm not even in the same league as a person like is it really my hero now at this point? I think so, Jean-Philippe Bouchot. I really like that guy. His work is just so amazing to me. That guy really knows his stuff, right? And I like to give my opinion. Of course, like I've just given a whole lot of opinion and prognostication about the market, but like the reality is that I don't like to look at myself as like a guru or an expert. I like to look at myself as just one of you I just happened to be the one running the stream, and that's it, right? All in all, the Fed does a really good job, but I understand if people don't agree on this. Well, let me put it this way, because I don't think that I can say that the Federal Reserve did a good job per se, but rather I think that the public's expectation for how good of a job the Federal Reserve can actually do is really unrealistic. They expect the Federal Reserve to be able to predict and see the top and bottom of every major cycle and make exactly the right calls at exactly the right time every time is what people expect, and is just not realistic, especially since what they do really is not so much like a, well, we think this is going to happen, right? They don't come in and say, well, we think the market is bottoming now, and so we need to stop raising rates, etc., etc. That's not what they think at all, right? What they do is they talk about risks, right? So the reason why did we make the mistake, I guess you could say, is because they thought that there was risk of more economic weakness caused by further waves of the coronavirus, right? And it wasn't until that kind of ended and the Federal Reserve kind of realized that the coronavirus was no longer having a super negative deflationary economic impact, and that any kind of further crisis that did cause lockdowns and stuff was likely to create more inflation, then they shifted around, right? So that was kind of the problem, was that they were worried about a risk that never came to pass. And quite frankly, in my opinion, they were too concerned about that risk. And why were they too concerned about that risk? Because everybody in power was overestimating the risks, because that was the whole thing from the very beginning, was that our estimates and how concerned we were about the coronavirus. It's not like we shouldn't have been concerned at all, but I think the reality is that the coronavirus was not as we overreacted. It wasn't as bad as we thought it was going to be. There's the sound, so it does still work. It wasn't as bad as we thought it was going to be. There still should have, shutdowns may be justified, etc. Lots of policies probably still justified, but like from the economic impact, like we could have recovered from it earlier, and the Federal Reserve didn't need to leave rates as low as they did for so long. So yeah, they should have done it 6 months earlier, right? Now on the split side of that, everybody's saying like, oh, they're going to screw up because they're looking at a lagged metric. Well, that just says to me that you don't know how the Federal Reserve works, because the Federal Reserve has discretion, and they can choose to look at whatever metric they want. And so they keep track of the Zillow House Index, for instance. It's just that even if you're looking at the more leading indicators of housing inflation, still isn't really too promising, right? It could be close, but they're not there yet. And you know what? As soon as they get there, like if next month it's like, house price inflation below 2% on an annualized basis for 2 months in a row, Federal Reserve could shift, regardless of what the actual CPI is saying. Yeah, they can do that. They're smart. They know what's going. What impresses you about Jean-Philippe Bouchot? So what impresses me about Jean-Philippe Bouchot is the body of work that he has been involved in. The number of so like every one of these studies are something that you're going to go and read, and you're going to spend a long time studying it and trying to figure it out and everything. And he just casually does this stuff on a day-by-day basis. He's putting out papers every year, and they're like significant research papers, right? And then on top of all of that, he turned around and he co-founded a hedge fund, or well, it's not really, I don't know if they call it a hedge fund, but Capital Fund Management, a fund manager. And some of their funds are the most successful CTA programmatic funds in the world. So like he's done it all. He's done it all. And I kind of continue to look back at this and I'm like, okay, like who are the people that when we're futures trading, they look up to? And they're, you know, you might say, I look up to speculator Seth. And I'm like, effing why would you look up to a retail trader when you've got people like this? The only reason that your hero's not John Philippe is because you never heard of him before. Because it's math and that's too complicated, I guess. You know what I'm saying? And I suppose that you know, the guys from Renaissance Capital probably should be my hero, but since I'm not able to see any of their research, I don't actually know what they've discovered, right? But Jean-Philippe, he's discovered a lot of amazing things about the market that are very, very relevant to what we do. And it's just out on the internet for free. It wasn't founded by me, joined after. So I do think you're correct that he was bought, but he is listed as a co-founder. He is listed as a co-founder. But the larger point on that isn't so much that he's a co-founder or anything to that matter, but simply that not only is he doing this stuff, but he's really truly making the big bucks doing it. It's not like, oh, he's a retail trader and like 1 year you pulled $1 million doing it sort of a thing. No, you're talking about somebody that's probably making millions upon millions of dollars, managing billions upon billions of dollars now. Right? Just to the point of that, you know, they're very accomplished people. And it's just, there's a lot of really accomplished people in the industry. Like the whole thing is that there's so many people in the industry that know this stuff. It's just the retail traders that don't know it, right? That's so amazing to me. Anyways, I gotta get going, guys. So we will see. Today we're gonna put in the title, Truss resigns. Truss to resign. Truss to resign. Yeah. I'm sure he's a millionaire. He might, maybe we'll talk to him someday and we'll find out that he's not actually as much of a millionaire. He probably, you know, I bet you it's probably the case that like he looks at other people and he's like, well, I actually make a pretty modest amount, but like actually it's a lot compared to everybody else though, right? Anyways, guys, see you tomorrow. Stay excellent, team.